Assalamu alaikum wa rahmatullahi wa barakatuh. Here we are again. Second period comments. Still Mrs. Akonde SA, Business Studies JS2 to be presented. And still on the topic, ledger entries. But this time around, we are going to talk about the sales and purchases ledgers, the types of ledger. Then a sales ledger contains a separate account for each individual to whom goods and services have been sold or rendered on credit. Don't forget, in the previous class, I mean the first period, I said sales ledger is the book of accounts that is used to record credit sales rendered. So here is it now. So it is also called debtors ledger account. It is also called debtors ledger account because it is used to record credit transactions. So here we will need to look at the example. The example we want to treat is the account belongs to O Asabi. So here is our sales ledger for the year. Like I've said, it has two sides, debit and credit sides. Debit particular folios amount for debit side and date particular folios amount for credit side. And when we get to the classwork, it's not going to be done this way. All the information that has been presented in this ledger account are going to be posted by us in the classwork. But one thing you should put in mind is that debit side is meant for anything received, while the credit side is meant for any payment made. So in O Ajabi's book here, the business commenced on June 3, 2013, and the balance brought forward is 12,500. On June 28th. So this balance brought down might be the cash in hand with Ashabi or the cash remain at the bank. So it's 12,500. BDA means brought down. That is the amount brought from the previous accounting year. So June 28th, sales of 18,500 naira was made, and this information was got from General Ledger page 4. GL4. So on 29, another sales was made, and the information was brought from General Ledger 4 as well, and the amount is 1,500. Let's look at the payment side. On June 10, 2013, cash of 19,000 naira was made, and the information was from General Ledger page 6. On June 15, returns inwards of 6,200 from General Ledger page 7. We are going to explain the meaning of all this immediately after this table. On June 30, balance carried down. The balance carried down here is the difference between the total in the debit side here and the total in the credit side, meaning that we'll take away the addition of 19,000, 6,002, 7,003, the addition of 19,000 and 6,2 added together will be subtracted from the addition of the information we have in the debit side, which are 12,500, 18,500 and 15,000. This give us 32,500 naira altogether. So taking away the sum of 25,200 from that give us the balance of 7,300, which is the balance carried down. This amount to be taken to the next accounting period. So we have the total for each side now to be 32,500 for credit side and 32,500 for debit side. So the balance brought down that will be taken to the next month, which is July 1 now, will be 7,300. So let's look at the analysis of the table or the interpretation. The following are the analysis and interpretation of the above example. A. O Asabi's account is kept on page 3, folio 3 of sales ledger and on June 3, 2013, as we have in the sales ledger, she owed the business 12,500. Like I said earlier, the balance brought down, which may be the cash in hand with Asabi or at bank, 12,500. So this was the balance brought down, as I've said, on page from the previous month, from the month of May. Then on June 10, she paid 19,000 naira cash. That's why we have this recorded in the credit side. Don't forget, in the format you are told, the credit side is meant for the payment. So she paid 19,000 naira cash to the business. So, and this information is contained in the cash account on page 6 of the general ledger page 6. So meaning that we will have the debit entry of this one in the cash book. Don't forget the principle of double entry, which says for every debit entry there must be a corresponding credit entry. That's why we have this 19,000 recorded in the credit side of our ledger. And on June 15, goods worth 6,002 were returned by Asabi. Returning words, as were taught in GS1, are the goods that has been previously sold that were later returned to the business. It may be due to damages due to one complaint or the other. So goods worth of 62 were returned by Asabi, and she was sent a credit note for 6,002 on the same day. Then the returns inwards account is kept on page 7 of the general ledger. It's kept on the page 7 of the general ledger, GL7. On June 28, she sold goods worth 18,500 on credit. Don't forget, your sales book is meant to record all credit transaction, all goods, all sales, all goods that were sold on credit. So 18,500 worth of goods was sold on credit on the 28th, and the information is from the general ledger page 4. On June 29, it was discovered that Asabi should have been charged 20,000 naira instead of 18,500 for the credit sales of June 28. If you look at the dates in the ledger, sales June 28, 18,500. So she was therefore sent a debit note. The money was undercharged of 15,000 for this undercharge. So this undercharge was credited to sales account on page 4 of the general ledger, and that's why you have it recorded on June 29 as 15,000. Then at the end of the month, Asabi owed the business 7,300. That is the balance between the receipt and payment side. So this shown as the debit balance on the account. That's how the informations we have in the sales ledger were being recorded. So that is as far as sales ledger is concerned. Now the purchases ledger. Purchases ledger here, as I've said earlier, is used for keeping the account of creditors. Creditors may be the suppliers, the person, the people, the organization that we bought on credit from. So it's meant to keep the account of creditors. That, in other words, it is meant to record all credit purchases made. So it is therefore a personal account of those who have supplied goods to the business on credit. Until the supplier is paid, the amount owed will be reflected by a credit balance in the account. Until the supplier is paid, the amount owed will be reflected by a credit balance in the account. Example now, the account belongs to O Kazim, the purchases ledger or purchases account. It has two sides as well, debit and credit, date, particular folios, and amount. On the debit side, date, particular folios, and the amount on credit side as well. On February 2013, February 15, 2013, the cash brought forward there. We have the balance brought forward on February 1 as 14,000. This was brought from the previous account month, which is January 31st. So the balance brought forward, this might represent the cash in hand with O Kazim or at bank, 14,000 naira. So on February 14, the purchases were made, and this information is from General Ledger page 8 as 10,500. On February 14, purchases of 10,500 naira were made. The information is from General Ledger page 8. And on February 15, cash of 21,000 naira. Cash of 21,000 naira was posted to the account. Then on February 18, another purchases was made, and the information is still on General Ledger page 8 as 5,000 naira. Then on February 20, there is return outward. The General Ledger page 8 is where we got the information come from. So that is 2,000 naira return outward. Return outwards are the goods that had been previously purchased but later returned to the suppliers due to one complaint or the other. So the balance there represents the difference between the receipt and the payment side. The difference between the addition of 14,000, 10,500, 5,000, 10, and the addition of the 3 gives 29,500. So the difference, taking away the addition of 21,000 plus 2,000 plus 6,500, subtract taking away the addition of 23,000, now 21 and 2,000 from 29,500 give us 6,500, which is the balance carried down that will be taken to the next accounting period, which is March 1. It represents the balance carried down there becomes the balance brought down of 6,500. So this will come immediately after the total. Let's look at the interpretation and the analysis. 1. O Kazim's account is maintained on page 20 for the 20 of the business ledger. Then on February 1, O Kazim was owed 14,000 by the business, and that is the balance brought down. Then on February 14, O Kazim supplied the goods worth 10,500 on credit, and this is recorded in the purchases account on page 8 of the General Ledger book. On February 15, O Kazim was paid the cash of 20,000 naira and recorded in the cash account on page 4 of the general ledger. On February 18, goods worth of 5,000 were bought on credit from Okazim, meaning that he supplied another goods worth 5,000, and this is recorded in the purchases account on page 8 of the general ledger as well. On February 20, another goods worth 2,000 previously purchased on February 18 were returned, and this is our return. This is Okazim's return out were returned to Okazim, the return outward. And at the end of the month, the business was owing Okazim the sum of 6,500, which represent the balance carried down. So this is shown by credit balance of the amount in the account. So apart from sales ledger, purchases ledger, we also have general ledger and private ledger. The preparation are the same, the formats are the same, it's only the headings that will be different now. Debit side meant for receipt and credit side for payment. So general ledger here is simply a ledger in which real and nominal accounts are kept, that is, sales account, purchases account, return inward, return outward accounts, as well as accounts such as assets, which are real accounts, and expenses and income accounts, which are nominal accounts. We call it general ledger because all the information can be found there. Information as regards the sales, information regards the purchases, information regards the return inward or return outward, as well as the expenses and income and assets can be found in the general ledger. Then private ledger, being the last one, is the type of account kept by a proprietor or the accountant out of the reach of other staff. The account kept by a proprietor or the accountant or out of the reach of the other staff. So far so good. This is all what we need to learn as far as the ledger entry is concerned. Sales ledger, purchases ledger, general ledger, private ledger. All these are the types of ledger that exist and that can be prepared. So cash book is the fifth one there. Cash book is the fifth one there, and inshallah is going to be the next topic. Assalamu alaikum wa rahmatullahi wa barakatuh. The assignment will be posted at the assignments section in the portal. Assalamu alaikum wa rahmatullahi wa barakatuh.